Alright, quickly review on the YM futures, which is the Dow. I'm gonna try to talk a little bit louder. Um, Alright, so you have the market went up here. It was a breakout here, and this is just the indicator I decided on adding because I like it. So it went sideways, hinged, broke down, came back, consolidated, went down, came back to test, and this this was really good because it was the up thrust that I was talking about, um, off of the breakdown. So this is some people love this trade. Like, this is their favorite trade. It's a break, a test, then goes down and comes right back up and does an up thrust right uh, right there. So never find this arrow. Hopefully it works. Okay, never mind. So there's the up thrust right there, and they were just high volume selling. That's why it says HV. But I'm more focused on this up thrust here, which basically initiated the markdown. But that's not the only trade. Like right after that, there was another breakout right here. Right there, there's a really nice breakout, and it went down. Now the question is, like, how will demand respond? Because in my opinion, there was distribution here is very obvious. Been saying this as it occurred, when it occurred, and it broke test over here. I don't I don't see any cause. You know what I mean? Over here, there's no evidence of cause. There's no hard evidence of heavy accumulation either. So you know, it's not easy to just break trends. And this is rotating on the daily chart as well, which is pretty bearish because they're going to join in. You know, and now the areas to look for is it's going to that area, which is uh, right there, because this area also is redistribution. It did up thrust, but they held, and usually when the market holds like that within a range, the range was inside this bar, 1 2 3, and they did like a little range over here, because you could I'll explain how you detect that in a minute. But anyway, it goes up, makes a range, and then breaks. So this area, there's redistribution in it. Okay, and now the market is going back into this redistribution area, and I want to see how it responds. There's many ways it can respond. I know, what we know already is that there's no real cause over here, meaning there's no base, no accumulation, there's nothing really, no hinges, nothing. It just rotates. It's just rotating back up to this area, and that's why I think that this resistance is it's going to be hard to go over. So I want to see how this rally responds um, in terms of when it gets here. Are they gonna absorb this area or not, or will it face stiffer resistance and go back down and then maybe have cause? I don't know yet. All I know is that there is that this is actually a counter move to test this breakout. So that, I think, is very obvious, and I know that there's sellers that are going to be lined up here. Like this is where, because the best prices are here, right? Without breaking trend, these are the best prices, obviously. without without breaking trend, and this is giving you a full retest of that area. So they're going to like the risk, which is going to be up above this up thrust high. That's the risk, and now it's a matter of entry. So they're gonna low. They're gonna, in my opinion, watch. You'll see. Anyway, uh, where is the daily chart? Is what I'm interested at. The daily chart is interesting because they it did pull back. You see? It did pull back right to that area. So that's why it is interesting. That was the first level of support, was right on this pullback to this area right here. And that's exactly where I had the line. That's exactly where it tested and where it bounced from. Okay? And so now the perspective becomes clearer. You're getting the bounce off of a daily support level. It's that simple. You're getting the bounce off of a daily support level. And you had a sell signal, and that initiated the pullback to that support level. And now we see what happens. Notice that I think this actually may also be in a spring position. I don't know yet. We'll see if it can hold. But watch the close today. It is very important, because the last bar, it would mean that the last red bar here has no follow through. It has no follow through. It is just one red bar followed by a test with a high end close. So that's very important. That means that the bulls bought it all from support. They went to support, bought it all back up. So, which, puts the market on a, I'm not going to say it's on a springboard position, but it's close to it. So that's like from a bull perspective. From a bear perspective, this is a rotation. It tested, it's coming back up, and they may break it lower. I don't know. But the market, I mean, it is a rally. It's a pullback to support. They're double thrusts here. Green, as you can see, which means aggressive buying. It tests that area. More buying comes in. Lack of bearish follow through. Some may say it's going to be in a very important position to rally from the daily chart, but you really don't know until it happens. So just consider it as a possibility. People talk about thinking in probabilities. There's also thinking in possibilities, and that's one possibility, that it's on a springboard if it closes high end of day green bar, that it's ready to launch further. But that's just one possibility. It may totally reverse, and that's why it's really important to watch the close, because again, it tested this support. There's buying from support and a high-end close. If today is a high-end close, that would be important. We'll take a look at the point figure. The point figure showed this is a larger point figure. It basically showed a climax, and after a climax you had a pullback. So I was explaining that this was not bullish, actually very bearish. Why? This block of volume is the biggest block of volume on this uptrend at a target count. Cause and effect. The target was reached with the biggest block of volume, meaning it's climactic ending action. And then from that point on, you had a pullback. And also, I'm not really seeing heavy signs of selling on this point figure. I don't really see it. Oh, wait a second. I take that back. The selling is right there. Um, yeah, that's not good. Right there, right in that middle. Uh, that right there. You see that? That is not good. That's one, two. Oh boy. There, yeah, that's yeah. So again, from the point and figure perspective, there's heavy selling, and then there's a break. So yeah, that right there, climax followed by a sign of weakness, followed by a break. That's pretty bearish. So again, you have multiple perspective. From the point figure, you can very clearly see a climax, sign of weakness, and then a break right into support. On the daily, you see a rally, pull back to support, and buying from support, and waiting to see the end of day. Right now, it's like it looks bullish, but watch the end of day today for the YM, and watch the close, and how, if it's high end, mid range, or low end. You know. So these are the multiple perspectives, and here off of this chart, this is smaller than the daily. This is actually not really showing me too much bullishness, because there's no cause at the bottom here. It just goes down and then is going back to a resistance area. So the coordination of these three things together will form a judgment. And you might say, oh, it's not easy or whatever, but eventually, like, they start lining up. When they line up, your judgment will be the indicator. The indicator will not be, okay, this is a breakout, whatever. The indicator will be an internal feeling that comes about from judgment, telling you bullish, 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 or bearish, bearish, bearish. And they will be different than what newbies may feel as impulsive. So judgment is trained judgment, which is something that's intuitive. Anyway, so it's getting very interesting. Alright, folks, take care. Bye. Oh, and this is for educational purposes only. I'm not advised. I trade at your own risk. Bye.